Let's go. Let's
For
go.
those of you who are new, welcome. And as always, this is not a webinar or a presentation, it's a conversation, and it's designed to help us all think much more clearly about risk, private investing, and long-term decision making. And today's topic is one of those things that people don't talk about enough, I think, because when you think about losing substantial wealth, it's usually not because of bad investments. Like they talk about first gen, second gen, third gen. It's usually because of bad family dynamics. And this is why I'm really excited to have Josh Gentine. Did I say that right, Josh? Last
You
name?
did.
All right, Josh Gentine join us. So Josh has experienced these challenges firsthand, and now he focuses his time on advising some of the wealthiest families in the world on governance, succession, and family dynamics. Now, just housekeeping wise, as usual, please jump in, ask questions, and we love pushback. Like that's where these calls are the most interesting and also the most valuable. And again, this is being recorded. We're going to share it afterwards. So if you need to hop off or anything, don't worry, we got your back. But still, and this is like the real value here is from a live discussion. Okay, so with that being said, Josh, I'm going to dive right into it. I want to ask you a question before we start this whole thing. So when you have a family come to you, what's usually already broken by the time they realize that they need help? Like, I mean, something broken, so they come to you, and I assume, and then what is that thing that is broken that people sort of don't
Yeah,
pay attention to?
I think so. Families come to us for two reasons. It's not broken and they want to prevent it, or it is broken. So to answer your second question, it's really family communication. They're coming to us with challenges that are manifesting in a family office within their family, and more often than not, it's because family dialogue and communication between family members has broken down for one reason or another, um, or multiple reasons, and that's where we pick up the baton and start to help them work through and navigate that.
Okay, so if we already talked about diving into it, give us some background. Like, why are you doing this? Where did it begin?
Yeah. If we go back to the beginning, I grew up in our family business, Sargento Foods. Um, or better said, I grew up influenced by the family business, right? I didn't I literally was cutting cheese in the summer in the factory. So I was living this experience of a family enterprise. Um, being one of the owners of Sargento in our small town of Plymouth, Wisconsin, very visible, had all of the baggage that comes from that, and never felt comfortable with it, and didn't really know how to navigate that. Fast forward a number of years, I'm working for Deloitte Consulting, and I started working with a client as an executive coach on the side, kind of a side hustle. And he had a big family company, and he asked me, "Can you help us build all of the governance and help us work through the family dynamics like you and your family have done?" And I took on that project and I loved it. It was this amazing intersection of psychology, sociology, family systems, business strategy, estate planning, governance. I was a governance guy at Deloitte. And so it hit all of these different buckets. And as I reflect back on my experience in our family business, we had great governance. We had a lot of structure in place. And I think that ultimately mitigated a lot of tension within our family because we understood what the expectations were. And I thought every family had that. Every family business had the level of governance that we did. And obviously, I've come to recognize that we are more the exception than the rule. And so, the idea of being able to help support families and be with them on their journey as they're trying to figure out all of these big questions for their family, and what does this wealth mean, and how do we think about it, and how do we use it, and how do we the number one question is always, how do we make sure we don't screw up the kids with the wealth? All of those things are the things that we've had to navigate. And I decided I'm going to spend my time. I left Deloitte, obviously, and started working with families full time on this stuff. So it's been very meaningful for me. And It's very personal to me, and we still go through this journey. Like I'm going through this with clients, and we're still going through this within our own family. And as we're looking at our fourth generation coming in, getting more and more involved in the business and the family office, it's very real and germane to my life as well.
Is it usually Gen 1 or Gen 2, Gen 3? Which generation usually reaches out to you?
Um, it depends. There's no rhyme or reason, Mike. I would say um, Gen 1's wealth creators, when they have the perspective, usually, Mike, a Gen 1 will come to us because they heard a talk or they heard somebody in their YPO group or whatever it might be like, hey, you should start to think about these things. And they have enough foresight to say, I'm going to start to build governance in the family, or I'm going to start to have these conversations with my family. Gen 2 is living it. And they might, in a family operating company sense, it's grown. It's sort of the transition from Gen 1 to Gen 2 is going on. There might be a question about Gen 3 at that point. So they're reaching out, and then Gen 3, and I've got Gen 4s and Gen 5s. We kind of have it all, Mike. So it really depends on the family and what they're looking at.
It's interesting because
No rhyme or reason.
I have some friends that are in these family businesses and larger sort of wealthy families where it's actually the second gen who wants to initiate some more communication organization because the conversation with the Gen 1 with their parents is very difficult and complicated, and there's a lot of baggage that comes with it. And so I mean, and I've seen them looking, for third parties to go in and help them out because they just can't handle
Yeah,
the conversation, right? Um,
that's it.
so I'm not even sure it's only about losing the wealth. It's more about, wanting to be involved because they are afraid if they're not involved enough, then, the shit will hit the fan because they're not thinking further down the road enough because there's a lot of control, the first gen,
Correct.
of what I see. So I usually like putting things in a very, methodological, in a very, streamlined method and
Yeah.
chronological approach. So like when you think about wealth, the first time you encounter when you think about family dynamics, as sort of trivial as it sounds, like when you have some wealth and you're getting married, the first thing you talk about, or your parents tell you to talk about if you're going to inherit wealth or if you create the wealth, is prenups.
Hmm.
And I'm sure there's like a lot of dynamics around that. I don't know if it's where you bring in a consultant or if you've dealt with that, but I think like that's the entry level to dealing with those hard conversations around wealth, correct?
Mm. It is one of the entry points. Ideally, there have been conversations. If there is wealth, before the prenup conversation, in an ideal situation, the family is having conversations starting when the kids are younger. If there's wealth already at that point, right? You're having those conversations while they're in their teens, and even before then about wealth, not numbers necessarily, not numbers, but about values, about what it means, how to think about it. That's really the start of the wealth discussion and the wealth journey. And then yes, certainly the prenup as well. And that is that process. I've got a client currently who's trying to navigate this, and their son's about to get engaged, and they haven't had this conversation. And the way that I look at a prenup is it is a platform for talking about values. And it is a conversation about protecting both sides in the relationship. And it can turn into this incredibly fruitful, deepening discussion, or it can be one of conflict. And I think it's all about the process by which it is started. So talking about wealth in a relationship, if I'm dating somebody and I plan to get to propose to this person, I better be able to talk about wealth in a mature manner with my partner, because those can be hard conversations, and aligning on wealth stories. What's your vision for what money means versus what is mine? Those are like conflict in families and between couples. Money is one of them. And so like starting your relationship with the ability to have those conversations and talk about values and what matters most, that's the start of a good relationship and great communication. Because if you can't have it before you're married, it gets really hard after you're married when you're already committed and turns out you have very different wealth stories. And so I think it's really important to start in that relationship prior to engagement and getting real about it. Then that builds the foundation. We now can have a meaningful discussion about money. There's a recognition that I may have, or you may have wealth. Great. Now, what are we going to do about it? Recognizing that there may be a mandate from the family to have a prenup. Like that may be in our situation, in a lot of the clients that we work with, because of the shares and how the corporate bylaws are structured, it may be a mandate. And so I want to be able to build a great conversation leading up to that point. And then we have the prenup discussion, which is not about, I don't think I'm going to be married to you forever. This is all about a recognition of where we are, the reality of the money situation or the corporate entity that we might have, if it's my situation. And then how do I make sure that I'm protecting you if something were to happen? Because if our marriage does not last, nobody goes in thinking it won't, but if our marriage does not last, I want to make sure that my spouse is protected through that process as well. And if I don't, it does make you wonder why we're getting why we're getting married in the first place, because there isn't that foundation of trust and communication and so forth. So the prenup discussion is all about anchoring in values and money stories and talking about what matters most and how do we think about money as a family going forward. That's the start of a great prenup conversation.
So am I hearing?
Go ahead, Mike.
I was going to say, am I hearing right that you would say ideally that started well before the engagement? Like that started, like you're a couple, you're serious, you're partnering, but before any talk of getting engaged, you're bringing up that prenup and starting those conversations, or is it with the prenup or after the prenup or engagement? Sorry, where you're talking.
I just want to say something, hold on, just high level. Like this is like none of us are lawyers. I don't think you're a lawyer, Josh, or are you? But we're not.
I'm not.
Yeah, this is not legal advice or anything. We're just giving like
No.
the more like
Good point.
relationship advice and communication and trust advice, like how to manage family dynamics. So just let's
Yep.
clarify just that point. Sorry, now, yeah, take it.
Yeah, Mike, I think before engagement, if there is a mandate for a prenup from a family because of their ownership in different entities, then having that conversation beforehand is very appropriate. And if I'm dating somebody and I have the intent to marry, and we as a couple have the intent to marry, then we should be able to have these difficult discussions and be able to talk about this prior to putting a ring on the finger. And so I think it's important to build that foundation of communication and trust as a couple as early as you can, because what you don't want to do is walk into this, and frustration and anger comes from the mismatch of expectations and reality. So if I'm going into this relationship with my partner and there's wealth over on this side, I have no idea what the expectations are, but maybe I expect that I'm going to be able to participate in this in some way, shape, or form. If the family says, no, you're not, I'd like to know that ahead of time so I can match my reality and my expectations and choose, do I still want to be with this partner or not? And the reality is, if I don't, like that's a red flag. Like that's an important thing to get out on the table real early. So I think the more proactive you can be on those discussions in a mature way, that's really important.
I think
That's a good practice.
I think, and I assume, correct me if I'm wrong, that approach of expectations and aligning expectations is important across the board. Like not necessarily between the couple, but also first gen, second gen. Like when you talk with your kids, you also want to align expectations on through the conversations around wealth, but also down to succession, I
Yes.
assume as well, because that's one of the reasons I think the friends I know, they want to initiate the conversation because they want to align expectations, and the first gen doesn't want to talk about it yet. And so let's just move from like the
I've never thought about this real quick. I've never thought about this, but if I look at the work we do with families, whether it's families with operating companies and they're working on governance, or families with family offices or wealth, and they're trying to think about how to navigate kind of the wealth journey with their kids, our work is all about expectations. Like that is it. Sometimes it's talking about expectations. Sometimes it's actually codifying the reality to make sure that everyone's on the same page about expectations. Family participation in the family office or the family operating company. What does that look like? How does that like? All of that is about setting expectations, and you're either adjusting your expectation or you're adjusting your reality.
Yep.
It's a
Yeah.
formula.
Yeah. I mean, no, I think expectations is super important to do on any aspect of life, specifically when it has to do with wealth and family dynamics.
Yeah.
Um, so how does that usually work in terms of like, all right, so it's not about even expectations, but even in order to talk about expectations, when you talk with kids, and let's just say that's the next step in life, right? Where do you see families starting the conversation with their kids around sort of financials, wealth?
Yeah.
Actually, I have friends who like teach their kids already to start paper trading, or open like a small Robinhood account with $100 in when they're like 8, just to like get them feeling with money. Or there's those small tactical aspects, but then there's like the board meetings that you do, and there's other type of stuff you do that get your kids not even expectation, just aligned with what financials are.
Yeah.
They're smart to talk about it.
So I think well, start talking to your kids about wealth in an age appropriate manner as early as possible. We have family meetings. I've got a 9-year-old and a 7-year-old. We have family meetings here at the table. I'm working from home today. And we're talking about our values. We're talking about the things that matter most. We're grounding them in sort of who we are as a family. That provides sort of the first entry into wealth conversations, because wealth is not about money. Money's about money. Wealth is about a lot more than just the balance sheet per se. It's about talents. It's about experience. It's about understanding how do we make a contribution in the world. So I want to have those conversations with my kids. And the way I sort of describe it, I want to own the narrative of what matters most to us as early as I possibly can, because there are a lot of influences and they hear a lot of noise, and I want the prevailing conversation to be from my wife and I in our situation. And the other thing I talk about, let's go into the money and sort of the wealth dynamic. If you're not talking about if your kids, odds are your kids' friends are talking about your kids' wealth before you are, especially depending on how much it is, where you live, so on and so forth. Like, kids pick up on the wealth narrative very quickly. Oh, you got new shoes. You have a new this. Your parents drive a nice car. You have a big house. They're talking about your wealth before you might be, which is why it's really important. It's like, oh, we don't want to talk about wealth because we don't want to spoil the kids. The problem is your kids are hearing about their wealth from their friends in a way that you wouldn't necessarily want. And I saw that growing up. Our friends talked about us because we were the owners of Sargento in Plymouth, Wisconsin. Our friends talked about it in snide comments, in all of the back chatter that you would hear. And that felt really uncomfortable. But my parents weren't having that conversation with us. So I think it's really important to start to talk about and anchor in what is wealth for your family. Is it a blessing? Does it provide us the opportunity to make an impact in communities? Is it there because it gives us the opportunity to give you guys amazing experiences in life, which we hope you use to then do X, Y, and Z? Own the narrative as early as you can, because those, like, they're going to anchor into those values that you set early on, and it's going to allow them to eliminate a lot of the noise. And in talking about this, if you can open up that dialogue and the channels of communication between you and your kids, when they start to hear that chatter at school, they feel safe coming back and talking to you about it. Because if that chatter at school changes the money story that they have in their head about what is money, potentially it's now a negative thing. And now it's like, oh, we had money and I don't want anything to do with it. It creates this dynamic that you don't want. And so own that narrative. Now, when we think about actual exposure and providing accounts to kids and giving them experiences, if I just look at our family, we provide shadowing opportunities for family members in the family business when they start at like 14, 15 years old. They join the shareholder meeting at 18. They're adults at that point. We got to treat them like adults. Now they're going to sign a non-disclosure agreement and confidential agreement when they walk into that shareholder meeting. But we're going to have that foundation set. And if they're old enough to go off and go to college, we feel like, all right, you need to be responsible with this. You are an owner of this, a beneficiary of this in the future, and it's important that you understand, what is this? What do you have? The idea of hiding all of this stuff as long as possible does not do any good. And so we try to get them integrated in a responsible way, assuming they have the maturity as early as possible, because that allows us to own the story and set the values that we ultimately want them to take going into the next generation.
So what I'm hearing is that people that kind of ignore this and think that they don't want to expose their kids to it, they don't want to, you know, like change them. You're saying it's impossible. If you have, you know, significantly more wealth than your kids' peers, it's gonna come up. They're gonna notice, and it's gonna be a thing. It's just you're not part of the narrative.
Correct.
Okay, that's good to know.
Yep.
I forget which celebrity said this, but you know, they ask him about his kids or how do they feel that they're being rich, and he's like, they're not rich. I'm rich. My kids are not rich, and that's like, I forget who said that.
Darius
Okay.
Rucker was, well, I think that's where I heard it. It's a great line.
I don't know. I think it was Seinfeld also said that. Jerry Seinfeld, I think, also said that in one interview, but I
Could
don't.
be.
But that's such an interesting way to look at it. But with that being said, you can't ignore the fact that they are wealthy and that, like you mentioned, you know, their friends know they are, and then it raised another question for me. And I also have other friends who are in not similar situations, but have been dealing with something like this. Is that so? If the first gen is wealthy, how does the sort of the transfer of that wealth while they're still alive go to their children? You know, do they you know set up trust and they get just cash flow coming in once a year or once a month, or do they get allowance, or do they usually let their kids sort of fend on their own and whenever they're much older, or when they inherit this money, then they'll encounter the wealth? Like, what is usually the dynamic that you see between first gen and second gen in terms of the wealth transfer, or not even wealth transfer,
Yeah.
providing for them, transferring money to them, funding them?
To borrow a line from the family office space, if you've seen one family, you've seen one family. Because the reality is every single family is different, and it is there are far too many circumstances to say this is sort of the path. Where the way that I look at this is you need to give your kids enough sort of agency to live on their own. Warren Buffett, give them enough to, you know, to do something, but not enough to do nothing at all. And I think it's a case of understanding your kids, understanding their maturity, understanding their interests, and being smart about how that cascades down to the next generation. Um, for some families where there is significant wealth and there are estate planning considerations that need to be taken into consideration, it may not be an option to allow this to just continue to grow in my estate, because the estate tax liability is going to be so great that it doesn't make any sense. We've got to transfer, especially if you have paper assets. You got to get those out of your estates before you die, and transfer them either down to the kids, uh, in their own accounts, or in an ideal situation, you're putting those things in trusts, and it might be a trust for the kid. It might be a trust for future generations. I think putting it in trust and putting trust together for family members is, if you have any wealth, that's a non-negotiable. And I think the question then becomes, what are the terms of the trust? How does the trust operate? And what are you trying to accomplish? And so whether a family member gets a draw on that from that trust, monthly, quarterly, annually, there's any number of sort of mechanisms, obviously. But it's a bigger question of what are the values you're trying to instill? What is the message you're trying to give your kids? and how do you want to structure that? And I won't get into all of the legal stuff because again, you can slice this 1,000 different ways. But I think having wealth passed down into trust where there is some understanding and expectation for what it means, what it is to be used for, what is the intent, what are the wishes for that trust, and you're having conversations with family members about these trusts. You don't talk to your kid about $100 million trust when they're 14. You can have that conversation when potentially they're in college or after they're after college, when they have built the maturity and the responsibility of what it means. And it doesn't mean that you necessarily get the assets at day one, but there may be some that comes out. Now, that's why I think it's so important to have the conversation so early. If there is a trust or any mechanism where they start to receive family wealth from one generation to the next, they need to have a sense for what this means. And if I've never had the conversation, all of a sudden, $1 million, 2 million, 10, $100 million trickles down into my account. That is it's this amazing opportunity and a neat thing. It's also overwhelming. And more often than not, family members are like, I don't know how to handle this. I don't have the sort of the maturity of the understanding because I didn't know this existed, or I didn't know this was going to be a part. So I didn't prepare myself for the responsibility that comes with this. And that's what's so important, is being prepared and being intentional about preparing that next generation for the wealth that they will ultimately inherit.
Is there a level of wealth at Gen 1 that you would say this is sort of where somebody needs to start thinking about this of creating a multi-generational, ongoing irrevocable trust versus just starting to have basic conversations and, not thinking about it going for multiple generations and maybe not even putting in a trust?
I think it's in terms of that threshold, I don't have any answer for you, Mike. I think every family is a little bit different. I think having these conversations, if you got a $10 million portfolio, if you have $5 million portfolio, that's going to like having these conversations is just really important, period, like full stop. And the mechanisms to bring it down to the next generation, a lot of that becomes a question of estate planning and tax strategy and so on and so forth. So I don't have an answer for you on that. I'm sure there's attorneys potentially on this call who would have a better sense for what that looks like.
Yeah, it's a good point to sort of then again say if anyone has any questions or insight on this topic, like please chime in,
Yeah.
unmute yourself or put in the chat. The objective of these calls is to have a conversation. Okay, it's not just us three, chit chatting. So feel free to chime in.
I just wanted to comment. I think at least a living revocable trust should be the bare minimum just about anybody with any realizable estate size. So especially your 3 million plus, you should have a revocable trust. And whether or not it becomes multi-generational, some is like, are we thinking legacy or dynasty, and what comes into play there?
Great call, Keith.
All right, so one of the things that we haven't talked about at all is around the whole business aspects of family business, and sort of where does that fit into this whole conversation? How does it, I mean, of course it complicates it, but what are the core complications that come into wealth transfer, family conversations, expectations around the family business?
I will look at this in two different lenses. I'll look at this in terms of involvement and then the wealth. So if I think about involvement in a family business, it goes back to what we talked about earlier about expectations and expectation setting. So where I see my number one answer still sticks about family communication and why families come to us without recognizing it's family communication. But family communication is a huge challenge, and very often understanding roles, responsibilities, and decision rights is a huge challenge when families are involved in an enterprise, whether that is a family office or a family operating company. Getting clarity around who's doing what, how decisions are made, why that individual might be making a decision, That clarity um, ultimately reduces conflict and friction in the family that has to be the owner operator of that entity. So to give you a couple examples, if I look at my dad and his brothers, my uncle Lou was the CEO of Sargento. My dad ran our consumer products division. His brother Larry ran our food service. You had three brothers. They had to have, we couldn't have three CEOs. They had to have their lanes. They had to have expectations, KPIs. They had to be making decisions based on their role. Otherwise, it's like, well, is this my decision or yours? How are we making this decision? Who gets to make this decision? Why you? Is it because you're the oldest kid? Like, you get into that dynamic. So clarifying decision rights is really important when there's family involvement, and even if there isn't, but when there's family involvement. Oftentimes in a family business, it has grown organically. There hasn't been structure in terms of that clarity around roles and responsibilities. And so the idea of moving, I often, the term I use is moving from family business to a business family. Moving from a family business to business family changes the dialogue, it changes scale, it changes operations, it changes mindset. It's really thinking differently about how are we involved? What is our involvement with this operating company, and how do we want to do it going forward? Making that jump from family business to business family is very difficult. A lot of governance. You want to create as much governance and clarity as possible when the family is involved in that business. We have, and to give you an example, we have a shareholder participation plan, which outlines very specifically if a family member wants to be involved in the business, what does that look like? Are we going to create a role for them or not? In our case, we're not. There needs to be an open role. They need to be a fit for that role. They have to apply for that role. There's a whole process that they're going to go through to ultimately get that role and be a part of the family company. We're going to encourage them. We want them to come back, even spouses. We want them to come back, but we're going to have a process for that. Once they're in the business, how do we make sure that they succeed? Like, what does that look like? How are we measuring their performance? And if they're not, how do we handle that? And if they're up for a promotion, how do we handle that? How do we handle, here's another example, how do we handle the management of a family member who's involved in the business? Because that's a real awkward situation when you're stuck managing a family member. We want to have conversations about that. We want to have conversations about retirement age. You want to put as much governance in place to clarify expectations so that it reduces friction. On the wealth side, families involved, sort of involved or owners of that entity, the question becomes, this is an ownership. If we think about, I'm not going to go too deep into it, the 4-room model, owner, board, management, and family. You got 4 different rooms. You want clarity between them. You want to have doors between them. But if we think about what is the role of the owners, they get to make the rules. They get to define success. What is success for our business? And by that I mean, is success growth? Is success liquidity? Is success making sure that family members have a role in the business if they want a role in the business? They get to define the rules and define what success looks like. So it's really important that families learn how to communicate about what they want from the business, because that ultimately, alignment or lack of alignment impacts the managers, the non-family managers who might be helping lead the business. So let me give you an example. In this case of Sargento, do we want to grow 50% in the next 5 years, 100% in the next 5 years? If we wanted to grow, hell, 25%, given our size in the next 5 years, we need to reinvest every dollar back in the business. We probably have to go out and bring in debt financing to go make acquisitions, because we're never going to hit that target organically. It's a hard market. We're in consumer products, right? So you have to think about, what do we ultimately want from the business? And then how do we structure business operations to achieve what we want as owners?
But
And the
Josh,
strategic
quick
plan needs to
question.
reflect that.
I want to push back a bit. Like, isn't that what every business does, regardless if it's a family business or isn't? Like, the board, shareholders are involved in those types of decisions, depending on the structure of the company, to
Yep.
reinvest or to distribute. Where is the line? Like, where does it change that the fact that this is a family-run business versus a regular business that needs to make those decisions anyway? Like, these sound like common conversations that you have to have a direction and rules set up.
You do. You do. And I think the challenge in a family enterprise is that the way decisions are made or ownership is a little bit different. Like, do you have voting shares versus non-voting shares? Do I have to take into consideration these minority shareholders? Do I want to? Like, if we have a block of let's say the voting shareholders in a family business, and they're making a decision that goes against what the entire rest of the family wants, you've made a decision. It's just like any other corporation. The only challenge is you have to live with these people. So you may make a different set of decisions. Your process may be different because if you want to maintain family harmony, I can't go out and just say, "Hey guys, let's go sell Sargento." That's not going to work, even if I had the ability to. So if that matters, you have an emotional dynamic that you wouldn't necessarily have at a PE company or a publicly traded company or whatever it might be. So it just brings in this emotional dynamic that has to be aligned on. And if you have a situation where one brother wants this and one brother wants that and a 50-50, how do you make those decisions? How do you navigate through that kind of stuff if there isn't a mechanism? And oftentimes there isn't a mechanism, short of just getting into a fight and duking it out legally.
Yeah, the other thing I could see is let's say Gen 1, got sort of complacent and it's just a lifestyle company. And so Gen 2 and 3 are getting big checks, a couple $100,000 a year, for Gen 2, maybe 30,000 a year for everybody in Gen 3. And they've built that around their lives. And all of a sudden then Gen 1 dies, Gen 2 takes over and says like, hey, we want to make this a big company. We want to change this around and grow this to make it bigger. Well, Gen 2 has had time to sort of adjust that, and they've got other wealth probably outside of the company. But you may have people in Gen 3 that have been counting on that for their lifestyle. And all of a sudden now they don't care that in 10 years it's maybe going to be more. They're like, how do I pay my mortgage? Because I was planning on getting 3,000 a month every month, from this company to make my life work.
Goes back to
You
expectations,
nailed it.
right? It goes back to
You
Yeah.
nailed it.
Yeah, so I could
And
see where that would really be impactful if you start having those changes like that over time.
great example, Mike. And that is a phenomenally common situation. And so as a family, again, depending on how governance is structured, as a family, you need to figure out how to work through that, recognizing that you probably, more often than not, most of the families that we work with want to figure out, how do we stay close as a family? How do we make sure that this entity doesn't ruin the family and the family doesn't ruin the entity?
Right.
And so you get into this real squishy stuff that has to be worked through, which is why you have to have the foundation of good communication, the ability to talk as a family about these things, because you're going to have to at some point. It like you can't get around it. So building that muscle, clarifying expectations, and then aligning on where you want to go. Now your management team and family members, if they're involved in the business, now everyone knows where we're going and we can make decisions, we can move faster. And I'm going to add one more piece because this is an important factor that a lot of families forget about. Maybe they don't forget about, but don't talk about. When families in a family enterprise, in an operating company, when you have fighting within the family, it's not hidden. Like, let's just be clear, like employees see it. You might think you're hiding it as a family and like it's not trickling, it is trickling down. Employees know it almost all of the time. They see that tension, and it does 100% become a retention and recruitment challenge. And if you're a human capital driven organization that relies on bringing in great talent, it becomes harder because the reputation is the family doesn't get along. They can't make decisions. If I'm a really talented executive, I have the option to go to an organization where there's clear decision rights and one that you've got family members fighting over whether we should make an acquisition or not. I'm going to take the former. And so it becomes a challenge. Like this idea of like working through this stuff is ROI. Like it has a very tangible financial impact on an organization, especially if it isn't done right.
I love it. Any other questions from our audience, or Josh, anything you wanted to share before we sort of wrap up here?
No, this has been fun.
Apparently we have one person who sent some questions over LinkedIn, and then another guy Ted recommended Oxbow Advisors, uh, who has some good books on the topic on generational wealth.
Nice.
And then we have a comment here about startup co-founder. So his startup was owned by CEO's friend and ended up being very profitable. Company paid quarterly dividend to the owner. Employees worked, owner owned, no liquidity, but they got some nice dividends. Eventually, the owner passed away and his daughter inherited. She had different ideas, wanted out of this specific space the company was in, and the company ended up having its exit on a cash sale to a smaller company in a higher leverage transaction. So this is just an example, I guess, of a situation where a company
Yeah.
was, transitioned to the daughter, and then that basically, I don't say ruin the company, but didn't achieve the best outcome for the company, correct? And I'm sure that
Yeah.
happens more often than not.
That's what I'd be curious. And what are maybe two or three things, Joshua, that you see people doing wrong? Sort of the like over and over, you're just like, people, can you stop doing this, this thing or this thing that you just sort of see families that haven't come to you that have kind of like messed something up with ruining Gen 3 or Gen 4 or setting something up wrong and fighting or over. I'm sure there's probably over concentration of sometimes with things. And how do you decide at what point do you get out of the one company versus, starting to diversify? And, what would you say there for things gone wrong?
I think things gone wrong. One goes back to the first point. Families just don't communicate about any of this. When the families aren't communicating about any of this, it's really hard. So we see that a lot. Two, I would say a lack of governance. They haven't actually done the work to build and think through how are we going to make decisions as a family. Um, that's a huge issue. Estate planning. We get involved in a lot of governance and family conversations because families with significant operating companies and ostensibly paper assets that are growing haven't done planning until far too late. And that creates a lot of chaos. And it's really difficult to pull the right financial levers at that point. So like when I see somebody in their mid 70s, they've got a very successful operating company. They might still be in it or thinking about retiring, and they haven't done any estate planning with that asset. That's really challenging. I'm like, how does this happen? How have we gotten to this point? As it relates to the rising gen or the next gen, I think I'll go back to my first point of communication, not talking to them about this and having these conversations. It makes me sad because somebody else is having those conversations with those kids and it's not the family. So that's frustrating for me. I also think just the sort of the transfer of wealth down um, unexpectedly too early without building programming around that and having sort of education platform and expectations around that, that can be a really, really dangerous thing. It's like, well, here, you know what? I'm going to give you $1 million this year. You know, that doesn't work. That's a recipe for disaster. It rarely ends well. Now, if we're going to start to transfer things down to the next generation, and as a part of that, we're going to set up this program where we're going to be talking about financial education, talking about stewardship, talking about philanthropy, all of these other things. That's upping the odds of success for that individual to find their purpose, to not sort of fail to launch because they had the wealth transfer down to them. And that's my biggest thing. Like it makes me so sad when you see somebody from in the next generation fail to launch because they can't figure out what their purpose is in life because they have been given so many options because of their wealth. Like that's a hard thing. And and they're not realizing their potential. It's frustrating to them. It's frustrating to their parents. And it's because there hasn't been intentionality around that stuff over the years.
Yeah, because the generation before is probably thinking like, if I had had, 30 million given to me when I was that age, just think what I could have done. This would have been amazing. Not really understanding what their life experiences are that put them into that situation, that they could have used that in a good way versus it being crippling for someone else.
Wealth is very crippling for a lot of people. I struggled with trying to find my path for years because I had every option. That's hard, and people don't talk about it. They think, oh, amazing, amazing, like you're so lucky, you're so lucky. And at the
Right.
same time, I'm living on an island. I'm not able to talk about this because my friends don't have it. And what do I do with that? And in my situation, I didn't feel safe talking to my parents about that. So that's what I try to help families avoid.
Love it. We have another
Well,
question here. We have
you're
another
not going to get
question
much
here.
sympathy.
Yeah.
No,
Yeah, the tiny
I mean, like,
mileage.
who's going to be like, oh, poor you. You have
Yeah.
so much money
correct,
to do anything.
correct.
So there's a question here about sort of family meetings and an example of
Mm,
Ken Ritchie in the Wall Street Journal having these meetings and kids say, what they invested in and what they're spending money and tax strategies they're using and stuff like that. Can you share a sample of a family agenda for those types of meetings and how frequent? You said frequent, like once a month, I guess, or what was the frequency?
in my immediate family, we have a meeting about once a month, and it's more around values. We're not talking about wealth and some of these other things. We are talking about, they get an allowance, and it's there. We help them think through the investment decisions, i.e., toys that they want to get, and like, okay, what does it mean? Like, if you make that decision, what's the opportunity cost? Try to help them understand some of those things as much as we can. Um, if I think about a family meeting that I would plan for a family, that we do plan for families, depending on the family, depending on the context, I like to break it up into thirds. So a third, if it's again, it depends on whether you're having a business meeting, if it's a family business meeting, shareholder meeting, or just purely family meeting. But a third of personal development, like thinking through the program. Let's just say it's a 3-day family meeting, a retreat. A third of it is professional development. How are we building better humans in our family, finding their path, finding their purpose, so on and so forth? A third of it is going to be sort of intentional time with our family. And let's call it planned fun, where we have activities, we have games. And for us, it's all about creating connective tissue between different branches and generations and so forth. And then a third, organic time. If I think about organic, like just you do what you want. So that's in kind of a family retreat model. Um, in a family meeting, oftentimes what we will do is we'll break the day in half, and we will spend the morning bringing in, if this is a family with an operating company or advisors and so forth, we'll have the morning where the family comes in and we're talking about the economics, we're talking about the business. You bring in the leadership team to do presentations about the different functional areas of the business. And then in the afternoon, it's likely going to be something around how do we develop a stronger family. So it might be a personality workshop. It might be bringing in a guest speaker to talk about purpose. It might be some activity that we're structuring to bring the family closer together. We ran one recently where we did exactly this. And in the afternoon, we were talking about values, and we were talking about some of the challenges of living those values. What did it mean to live those values? How are you actualizing those values? And we wanted them to be comfortable opening up about what they agreed with, what they didn't agree with. Where did they see in the course of a year their values being challenged and how they handle that? It's all about creating intentional dialogue between family members so that we are building psychological safety in the family so that they can have meaningful dialogue when things get tough. It's all about building credits over time. And so that's an example. You can slice this 1,000 ways depending on what the family needs and wants and so forth. And when we do this, we're always interviewing family members. We're talking about what are they working on before we kind of design a day. And then obviously with our clients, we have deep knowledge of the stuff that they're working through, and we're building that over a course of 5 years and the different things that we want to lean in on. One thing I love, just real quick, one thing I love is when, if we think about the rising generation, how do we bring in the rising generation in to give a presentation about something they're passionate about? Like, think about a 12-year-old, 14-year-old coming in, giving a presentation about, my son loves Egypt. Cool. Present about Egypt to your family. What are you passionate about? Why are you passionate about that? What do you know? How can we learn from you? Giving him public speaking skills, learning how to talk with family, asking questions. Like, those are cool opportunities to get to know your family at a deeper level and create some really neat kind of exposure.
So I also have younger kids, 11, 9, and 4-year-olds. So my 11, 9-year-old, whenever they get a gift, like money as a gift from anyone, any birthday or holiday, we deposit it in our bank, and then they have a spreadsheet. Each of them has a spreadsheet, and then I tell them every month, any money that's in there at the end of the month, if it's still there, you're going to get interest on it. You can take a loan against it as well. You have to pay it off. From any dollar you make working, like if you go out and, I don't know, shovel snow or rake leaves or whatever you do, I'll match dollar to dollar whatever you do. And I'm trying to sort of emphasize understanding financial, terminologies and how mechanics work at a very young age, and also
Right.
work and the compensation you get for that actual work.
Yeah.
So I think it's so important to talk and get them involved at a very young age. So I love the question. I think that was a great answer.
Yeah. Thanks.
Anything before we wrap up? Okay, so I think this is a good place to wrap. Josh, thank you so much. This has been an awesome conversation. For
I
everyone,
love doing it.
yeah, for everyone who joined us live, thank you so much for showing up. And I love the questions and perspectives. This is really what makes these calls worth doing. We're going to share this recording afterwards together with Josh's contact if anyone wants to reach out for an offline conversation. And if you're listening to this recording, we'd love for you to join us live in the future. Being live is very different. The dynamic is different when you're in the room. So I think it's a great opportunity. We're going to send details for the next call shortly. Next week, we have a really interesting conversation as well. And again, thank you everyone for joining, and have a great rest of your day. Thank you so much.
Thanks for having me.